Oi, how you doing? So this is going to be a little bit more complex video, or at least the topics are. Um, I recommend you watch it even if you think you can't understand it. I promise you, you can understand anything throughout this entire saga of AMC and GameStop and markets in general. You just need the right explanation. And I like to think that I have a slightly above average capacity for that. So I'm going to try to make this as palatable as possible, but also leave some open ends for complexity. So this just popped up on my timeline. Um, a tweet by Holger Giepitz. I'm sorry, sir. I don't know how to pronounce your last name. Um, so this came out about 20 minutes ago. He says, just to put things into perspective, the fear index, aka the VIX, the volatility index, jumped 54% on Friday, the fourth biggest jump in history of the VIX, highlighting market complacency risk. And here we have a chart of the VIX going all the way back to 1990, and you can see that the last time we've had a jump like this was basically COVID era, where it jumped just through the roof. It hit where 2008 was during the housing crisis. But now we've hit levels that are beyond the efforts for tapering back in 2018. It was like Q3/Q4 that went into effect where interest rates were brought up a little bit. And I hope you can see, so I'm looking at this piece right here, right? This is 2018 during the tapering, and now here we are, present day. And if we look at SPY, where's TradingView? So if we look at SPY, and we're going to go to a 1 week view, so each candle is 1 week. If we take a look at, where did this go? Let's take a look at 2018 during that event of tapering. So about through these white lines right here. And people forget a lot about just how contagious some events are. And I hate to use that word because it sounds like a pun. It's an involuntary pun. Markets have too much liquidity. I've harped on this a lot, and I'm developing more and more of understanding and a vocabulary for this idea. And what I mean by there's too much liquidity in the markets, I mean that there's too many avenues for money to be moved around in. And the value of those monetary highways are completely disproportionate to that of which is traveling on that highway, as in exotic liquidity pairings. And what I mean by that is if you securitize leverage via cryptocurrency, right? And I don't have anything against crypto. I love crypto, but just follow me here for the sake of argument. Interest rates being almost 0%. So all of the money that is being printed has little to no return and is just creating this this backfill constantly where we're printing. I think we've printed more in the past year than the past like 20. It's some egregious figure. Even if I have that wrong, it doesn't matter. The stat that exists out there that I can't recall perfectly is just egregious. The amount of printing that the United States is participating in does not indicate any form of economic recovery, any form of sustainable economic recovery, and does not show a sane handling of whatever we're going through. Interest rates are piss poor. CPI report came out to 6.4%. The high back in 2008 was 5.6. All of the money that that we're printing is just filling this balloon, this bubble. The FINRA margin report. I'll pull this up real quick. This is an interesting one. This is not margin from retail investors, but from institutions. Let's find this chart real quick. I'm sorry, you can't see. Is this the same thing? Bear with me. Bear with me. Looks like we've got one right here. Yeah. So the most recent reporting of FINRA margin utilization comes out to just shy of $1 trillion. And what is the reverse repo at? Uh, 1.5 trillion. So the amount of margin being used is 66% of whatever is housed in the reverse repo, which Charlie's Vids has done and continues to do excellent coverage of that, which happens to be primarily composed of BlackRock components and Vanguard and all of the major authorized participants, aka market makers, within the markets, and thirdly, a lot of ETFs that possess equities like AMC and GameStop, right? And then we see that margin by FINRA members is nearing $1 trillion. So let's take a look at SPY again. And let me get rid of log, just for a more linear perspective here. This indicator down here is a really interesting one. This is plotting volume and weighting price into it. So it's like OBV and VWAP having a baby. And it provides a very unique insight because you can see how we had this huge drop-off during COVID, and we've been following this trend, right? And we're actually at the top of the channel as we speak. Like, so look at the rate of change in this. Like, volume has been just steadily climbing at a very, I don't even want to call it mild. This is like stagnant. This does not represent any form of sustainable growth, because half of it just gets wiped after a quarter. Let's see, this is the week of April 13th through the week of June 8th, and then you drop, call it 25% worth of volume. And same thing here, except so the recovery here led to a drop of 50% subsequently per the next cyclical sell-off. You do it again, and this time it drops 100% of the previous retracement, and it just keeps repeating this. And now we've prematurely been rejected from the top of the channel. Okay, so we have, given what we're used to for the past 2 years, 3 years, 13 years, considering 08, let's take a look at what the actual sentiment as far as pricing goes looks like. We have a very respectable, not even really, but for comparison's sake, a respectable rate of growth here. Meanwhile, SPY is up almost 100% since then. So SPY is up almost 100% since COVID. Inflation is 10% higher than it was in 2008. Minimum wages are crazy. There's sign-on bonuses now at jobs that didn't originally have them, and I'm not throwing shade at anybody who works at said jobs. I'm just illustrating points here. Interest rates are near zero, so all the money being printed is just snafu in the long run. Um, the amount of leverage that FINRA members are using is almost $1 trillion, right? And then you start to wonder, well, how much of that has been used to securitize even more leverage? How much of that $1 trillion was then used to lever up by 2x or 5x or 10x? Like, let me not use integer-based scalings here. Let me use percentages. Levering by 2x is levering by 100 times, 100%, right? You're using 100% of what you don't have. 5x, 400%. 10x, 900%. You know that you can leverage your crypto actually by 100x if you're an institution. And then we see SPY trading like a mid-cap volatile stock. It's like every day you sell off in the morning, and then 11:30 hits, which happens to be the median time for when reverse repo transactions settle and are reinitiated for the following day. And then you have this V-shaped recovery of the morning, and then melts up into close. And you have this really weird candle that happens at close, which I don't know if people have noticed or not. Again, Charlie pointed this out. There's always a candle at the end of the day where you have volume just go through the roof on SPY. This candle right here was 4 million, right? 4 million in volume, and granted this was Friday, so I don't want to use that. The principle still holds everywhere. We'll go to a more peaceful time. Let's go to the 10th of November. No, that was still a little aggressive. This whole entire thing is just pure volatility now. I can't find it. Okay, here's a relatively steady day. This candle towards close, I'm on the 5-minute, was 3 million. 3 million in volume. And look at how tight the spread was following. It's uncanny, and I'm gonna tie all this back to the original tweet, which I think this is the primary symptom of too much liquidity in markets, and you're seeing this surplus of liquidity. It's decadence, truly. LPs are probably just going crazy over how much they're mixing and matching as far as securities go. They're having a heyday. We had an equivalent of volatility off of an event that resembles maybe, I don't know, a 10th? No, not even, maybe a 50th of the uncertainty or fear that tapering in 2018 had. We had the same amount of volatility present itself from what was simply a variant of a virus that has been quoted by those who found it to be symptoms to be mild, and then expressed their confusion as to why there was so much hoopla by media in first world nations. So to break that down and make it simple, we saw the same amount of fear being expressed inside of equities as we did when we decided to hike interest rates up in 2018 by also a minute amount relative to what it should be for 2018 and what it should be now. I think this is just showing how sensitive every market is. Every market that exists, your bonds, your fixed incomes, which bonds falls under that, but so your fixed incomes, your equities, your bonds, I'm sure swaps would even show this. Um, it's all being just more and more linked together, and you're getting this exotic form of what is a multi-market ETF, essentially, where every trade made by institutions and big players has a hedge somewhere else that that's normal, right? But the amount that this is happening and the lack of friction that you see in turbulence throughout markets where it reflects everywhere, you're seeing the effects of this start to happen, where the slightest of disturbances is rippling throughout every layer possible, because it's no longer about finding quality liquidity and quality hedges. It's just how fast can we get a little piece of the pie of what crumbs are left. And as this discrepancy, or as this I'm looking for a specific word, as this disparity, as this disparity becomes more and more realized, where whether it's the recycling of liquidity, the recycling of a particular pairing, whatever it is, the effectiveness of recycling all of this is now exponentially losing value, I believe, where now you can't yield the same amount in one position, so you're splitting it into halves and then finding sub linkings within those markets. So instead of creating a pairing between Bitcoin and SPY, for example, right? You do Bitcoin and Ethereum. I'm sorry, you do SPY and Ethereum, but then Ethereum becomes too saturated, where the sensitivities there are even more realized because everyone else moved on to that. So now you go and find some shit coin, all right, shit relative to more stable-esque coins. And before you know it, now your hedge is being anchored by what is a very volatile excuse of a pivot position. And now you're getting exposure to there, and there's too much noise. And it begins to crumble, because now the quality of liquidity, that's been gone for a while, and now the quantity is being exhausted because there is nothing else left to securitize with, and everyone else has gotten to that position before you have. We've printed all the money we can. We still do it. Inflation, I mean, it's now a good thing per headlines. That's literally what mainstream media has to say. Jerome Powell, no more than 3 months ago, was saying that inflation was transitory and that they were meeting expectations and giving every possible convoluted euphemism to, oh my God, we're fucked and we're okay though, as possible. Like, where does it end? And how? Why why does the VIX show more life than, and even consistency, than some of the major indices? The VIX seems more stable than SPY. Well, the VIX is the opposite of SPY. Yes, but there is a market that still is prevalent within volatility indices, because at surface level, SPY and VIX will invert each other. But if there is more interest in playing volatility than that of an equity indice, then you're going to see more deviance from VIX than the SPY, where the VIX seems to be doing its own thing. The movements of the VIX and the frequency of seem to be more stable and more natural than our benchmark indices. It like, it doesn't make sense. It makes sense in a really fucked up way. But when you use historic lenses of how markets are supposed to work and how inflation is supposed to be dealt with, like none of this makes any sense. And yeah, these are unprecedented times, but how many times are you going to say these are unprecedented times before you just do something about it? Instead of just recycling the same alibi and the same reasonings and the same stats, why don't you just do something about it? Unless it's not stable enough.